Where here on the thing, I won't read all the statement here. I'll just mention it. Have we got any apologies for absence, Jack?
Yeah, we got. So we've got apologies from Councillor Mark Blake, Councillor Amin, and Councillor Ajay.
And we've got, if I saw right, from Mr. Sappho.
I haven't heard anything from Councillor Sappho since.
Send an email around because it clashes with something scrutiny that I have to do, and she's complaining about the scrutiny, being set up at the same time. Yeah, that's all. Okay. Any urgent business?
We've got no urgent business, Chair.
No urgent business. Any declarations of interest? I think we are all aware now, of what it means. Anybody describe? No? Okay. Excellent. Any deputations, petitions, presentations, questions? No? Okay. All right. Let's go to the minutes quickly. Pages 1 to 12. First of all, those who were present, accuracy. Are there any issues that you wanted to raise that you think that they're not the minutes accurate? Any corrections? No, not with attached to it is also the decision tracker, from previous decisions, whether it happened. Have you had the chance to look at them? Any questions about them or anything? Any issue you want to raise from that one?
Sorry, are we at the actions because I can't hear always?
Page 11, yeah.
Yes,
Okay.
Yes, I have two comments, if I may.
Go on, Alexander.
Yeah, okay. So the action about setting up an informal group with the head of procurement, head of audit and risk management, and the CEO to ensure issue and procurement were resolved in a timely manner. I wonder if it would be possible to have a report to this committee about what this group is doing or discussing or setting in place to ensure that the issue and procurement are looked at. Thanks.
Yeah.
And
can I just discuss that one separately, because it is a series of decisions there related to the procurement audits, all right, which all we see here is saying ongoing, and that includes that one. And I'm not very happy with that one. Jack, did you get anywhere by chasing the relevant officers there about?
I sent an email yesterday and haven't got a response yet.
Yeah. I would like to minute dissatisfaction, to be honest, for not having progressed some of those things that we decided at the last meeting. I know it's only 4 weeks ago, but nevertheless, there's quite urgent stuff. I don't want it to be kicked in the long grass. Yeah, and applies to some of the other actions there for another couple of hours. Okay, sorry, Alessandra, sorry, on the same subject, just on the.
No, just on I don't remember.
Yeah. Okay. Alexandra, your second question?
It was the next section where it says about to create a contract register, and it says this will be attempted at the end of Q3. So I assume it's Q3 of this year. So it says ongoing, and I was wondering if it's possible to have an update of that. Yeah. Because I assume that Q3 is past now, so.
Yeah.
So that was my second point on this list. Thanks.
Is there any response to that one? No?
Which action is that, sorry?
1, 2, 3, 4.
So
the fifth down.
That is Barry Phelps' response. So
okay.
I can go back to him again if you want an additional response.
Can I say also that we got one was to send to Councillor Mahboub the public minutes of the Staffing and Remuneration Committee for information. Did you receive it? Yeah, that's everything. You didn't want to. No. Okay. All right. Another one was for you, Anne. You asked for some information. Let me just see. The school audits. And field work, yeah. Did you receive it? Yeah. It says here completed. Yeah. Yeah, okay, so we're happy with that one. Okay, thanks. So anything else on this particular thing, minutes or the actions? No? Okay, next item on the agenda we've got the draft statement of accounts 21-22. Right. Is it Casey? Oh.
Thanks, Chair. Good evening, councillors and colleagues. My name is Casey Kewu. I'm the head of finance for housing and the chief accountant of the borough. I'm here to present this report, an update on the draft statement of accounts for 2021-22. And I have two appendices. One is the draft statement of account itself, and then the other is an update on the progress of the 2020-21 audit, which precedes the draft statement of account. So, Chair, if you don't mind, if I introduce this paper, then I will introduce David Eagles, the audit partner for BDO, to talk us through that update before we now go into the 2021.
Okay.
All right.
Hello.
Okay, all right. Let me let David do that bit then.
Welcome, yes.
David, over to you.
Thank you very much. I'm going to seamlessly hand over to Tharsha Vosper, who is the senior manager for the audit, who will present the update paper on the two key areas which are relevant to the corporate committee, i.e. The main council audit, which includes the financial statements and use of resources, and also the housing benefits work. So she'll talk you through those, and then we're happy to take questions at the end of those from committee members. So I'll hand over to Tharsha now.
Thank you.
Hi everyone, I will run you through the update report. So in respect of the main council's accounts audit, we recommenced the work on the 3rd of October, and we have resource bookings through to Christmas. We have agreed...
Can I interrupt you for a second? Can everybody hear properly? Is it possible to turn the sound up a bit, because I don't think we can hear you very well.
Apologies, Is that any better?
Oh.
Sorry, Tash, can you just say something so we can hear you, or try the sound check?
Hello. Can you hear me now?
Please go ahead.
Okay, thank you. Okay, so since recommencement of the audit, we have been focusing on property, plant and equipment and schools payroll. So in respect of property, plant and equipment, we've looked at HRA valuations. That's a key area. In the report, you'll note that we list that there's about 219 assets which are actually outside of our expectation range. Since issuing this report, we've actually reduced that number down to 91 assets, and the remaining we are working through with the external valuer and the finance team. We have completed a lot of work around beacons reconciliations and additions and assets under construction. We, in respect of schools payroll, so this is the expenditure side, there are 17 schools which we need to review the expenditure for. At the time of issuing this report, I think we mentioned that there was about 7 schools where we'd yet to have payroll information or transaction listings from. We have been chasing that quite a lot, so we've kind of brought that down to only 4. So there's 4 still outstanding out of the 17 schools. On the remaining 13, work has commenced and sample testing has been completed. However, there are queries outstanding. The other work that we've made progress on is grants received in advance. So we've managed to raise queries, documentation has been provided, and this testing area has been completed. And we've also done the same around the cutoff testing as well. So if I just move on to the next page, just to highlight that manager level review is ongoing and will go through until January next year. And then following that, we'll have partner and external quality control reviews. Technical reviews from the accounts are currently ongoing as well. And these are in discussion with management currently. Just going to pass back to David just to talk about the infrastructure issue.
Yes, so it's just a brief update. We've set out in the paper, I think, the key points. Last time we were speaking to you, we were waiting for the department to come up with a consultation or some visible progress on that. Lots have moved since that point. We've had some useful engagement with DLUC to talk about how that statutory instrument is being phrased and whether it will sort of cover off all the things which we think you need it to avoid having to have a qualification. So not a huge amount has happened since that update paper, but that's only a week ago. So we're still waiting for the response to the consultation, and BDO, as with other audit suppliers, submitted a response to that. So as far as we're aware, we are still on target to have the combination of the update to the Civil Asset Code and also the statutory instrument to enable things to be concluded on this particular issue within January. So we'll continue to talk to the council officers about that as soon as we have a definitive position. So I'll just hand back to Marcia.
I'll just pull out a point on the use of resources. So there is a new approach that will be taken for the 2021 accounts, and it's we'll be focusing on the significant risks under the previous code. So previously we had financial sustainability as one, and this report will actually go into a lot more detail than we have historically done. So in summary, on the main audit, we are anticipating bringing an audit progress report to the 2nd of February committee, and with a final completion report to be issued in March.
Just in case some, that's referring to the pages 171 to 73 in your pack, yeah? And it is a report from our external auditors in relation to the issues that we discussed in the previous two meetings about the delays and the difficulty in completing the accounts for the last 2 years, basically, yeah, and the current one. And this is going into some of the details, the progress we've made, the difficulties we've got, and so on, yeah? Any questions on this particular aspect of it, not on the whole report now, which will go in a minute, but on this particular side aspect about the delays, about the difficulties that we rehearsed them in the previous meetings, but just other kind of thing. Is anybody wants any clarification to ask? Is everything right? All right. What? The 2021 audits, let me just clarify something because it's helpful to everybody. Yeah, we got 2021, got stuck with all the problems at the time, with the pandemic, the Brexit, this and that and the other, the changes then of the regulations. Because this hadn't been completed, that means that the 21-22 audit, the one that we'll go next to, yeah, is at this stage on a draft side, because until these ones have been completed, we can't really move into the next bit. So, referring to that one, and let me just be clear: when do we expect? Have we got a date by which these accounts, the 2021, will be cleared? Can anybody? Yeah. Yeah.
So the short answer is no, because we need to complete this year's audit, so the 2021 audit that I've just been talking you through, before we are able to start planning on the 21-22 audit, and that's because partly it's a sort of a different risk assessment, taking account of things that have happened in the previous audit, so we need to finish that first. And secondly, when we're considering risk focus and materiality, we have to take into consideration any unadjusted items from the previous year to feed into that process. So we aren't able to set or schedule in that audit yet. But what I would say in terms of trying to catch up with things is Tharsha has mentioned that we have a new use of resources approach which applied from the 2021 audit, which will be the first time of using it. But there are opportunities, because we are, of course, beyond the end of March 22 already, to be able to undertake 2 years worth of work in one go. We have sort of one, I suppose, large big bang approach to covering all of the authorities' arrangements, including those areas which we wouldn't have covered in as much detail under the previous arrangements, and to simply sort of update between the 2 years for the changes or the improvements that the council has made between the 2021 position and the 21-22 position. So that should enable some degree of efficiency and catch up in that area at least.
The list is here about the areas that they needed more work and they still need some work, etc. Am I right, have I understood it right, that you said that on the 2nd of February committee we will have the final bit? Is that the intention?
We've said we would bring an audit progress report because the field work should be completed by that stage and manager review should be completed by that stage, but we won't have completed all of the final sort of partner and quality reviewer work as at the 2nd of February, or at least certainly by the point at which papers need to be circulated in good time for this committee. So the intention is to then provide the full audit completion report, which is the final summary of the work, during March.
Is the deadline, yeah? Okay, well, we are in your hands, guys, all of you. I don't know if anybody wants to ask any questions about that side of it, the procedure. Yeah, Mary first.
Thank you. I'm not sure whether you're the right people to ask, but it seems, and I'm new on the corporate committee, but it just feels like that's a risk to the council that we are now looking at trying to audit for 2 years at once, and that we still haven't completed the audit for 20 to 21. I understand the complexities of everything that you've said and the detail, but I just want to know from you what you think the risk is to the council, if indeed you think there is a risk. Thank you.
I think it's worth understanding that the infrastructure issue which we've referred to means that there are a very significant volume of councils like yourselves who hold infrastructure assets where the audits of the 2021 accounts are not yet complete, and therefore neither are the audits of the 2021-22 financial statements underway. So except in exceptional circumstances. So you are with a very wide peer group of councils in this sort of position. In terms of the risks or the exposures, the one area where we have sort of had feedback from other councils that they are concerned is that they haven't had an explicit positive confirmation of use of resources if that work is not complete yet. But all I would say in terms of the risks that we brought forward from previous years, from the 2019-20 audit, was that we didn't have any sort of qualification issues related to that. So unless something has sort of gone significantly downhill since that point, then we wouldn't anticipate any sort of major significant areas of weakness. But of course, we need to do that completed work before we get to that point. In terms of other areas, the council's results do feed into the whole of government accounts process, but we know that that is significantly delayed nationally anyway. So there are no sort of major issues in terms of exposure. Obviously, officers would like to have the audit finished and to be able to sort of focus on catching up, as would we. But I don't see any sort of major risk areas from the delays that are national or special to Haringey.
Well, the one thing that I like to thank you as well is I do understand, external auditors are not appointed by us, but, they are rotated every 2 or 3 years or whatever you have to change. And we would have changed now, but you have agreed to continue until you complete that, because if you had changed, auditors as well would be starting again from scratch. The whole thing. So thank you for that. But obviously you are fully aware, and I'm sure you share our concerns as well about the inordinate amount of time it takes under the circumstances, not only for us, I know it's for a lot of authorities, if not most of the authorities, but nevertheless, it becomes a bit chaotic when now we got third year that is still, hanging the one to the other. It's like a train overall. So if we register that, thank you for the update very much. And you're very welcome to stay, make any other comments if you like, please do. When we're discussing now the 21-22 one, yeah, that you put on. Now, if I understand it right, KC, just before we start, is that these two stages is we produce something, the authority, that goes out consultation, and then when it gets completed that side, then is that when the external auditor starts taking in detail and looking at all the and we reach with the 21-22 the stage now where we just gone to consultation. And this is the draft that we're going to be discussing. If I got it wrong, you please explain. Yeah, I think that will help to put the whole thing in the context.
Yeah, thanks, Chair. The report before you is the draft statement of accounts for 2021-22. Normally, we expected the audit and accounts regulation stipulates that the draft has to be signed off by 31st of May, and then the audit should have taken place by 31st of July. But due to COVID, those deadlines were relaxed or extended to the publishing of the draft to 31st of July and the completion of the audit to 30th of September. And like the chair said, the process is when we publish the draft, we have a period of 6 weeks or 30 days where it goes out with a public notice of inspection. People who go through it, they want to raise any issues, they come back to us or go straight to the auditors and raise their issues. And that period started from the 3rd of October to the Friday 11th. That was last week. Today is 15, yeah, last week. So the period of inspection has ended actually. So what happens after the period of inspection? Then the auditors now come in, do the audit, and then hopefully in the old timelines meets the 30th of September audit completion. But clearly we didn't meet that 31st of July deadline for publications. We missed it for reasons very obvious we've raised here, the knock-on effect of the 2021 audit. But we have published. We published on the 30th of September, and we've gone through the period of public inspection, which just ended last Friday. Though this report was drafted before then, so it's still talking about the completion date. The significant thing for you to note in the statement of accounts, it's the council's position. It hasn't really changed because the pattern is that we come here to highlight if there are significant changes from previous years. But in this year, there's no significant change from previous year's accounts. The council balances, including schools, is at 119 million compared to last year where you have 132 million. And the reasons behind the drop is the collection fund. Last year, government gave us, due to COVID, gave a lot of grants for collection fund. And the essence of it was that we put a lot of it in the reserve because we know post-COVID, there'll be difficulty collecting these grants. So we had to use So in this year, last year, we had to pull some of those money we put in the grant, and that's why you see the drop from 132 to 139, and then a little bit of transformation fund that was drawn down. And then on the housing revenue account, the HRA account, the 2020-21 balance was 14.8 million, but the current balance now is 20 million. We had to work to raise that balance because of the large scale program we are carrying, 1,000 homes, existing stock we are carrying. We felt to help us mitigate against external or some other risks. Like now, we didn't plan that, we didn't know that interest rates would be going up. So it was good that we actually raised that balance, the right reserve, to 20 million, so that when such things happen, we have enough to react to such changes. And lastly, I noted the increase in the balance sheet position of the council by 372 million. It's largely around valuation of properties. The values went up by, we have WHE, who are external valuers. So it's largely down to the valuations of those properties that the our asset position went up. Outside that, there's no material difference from last year's 2020-21's account to 2021-22. Sorry, it's difficult getting this years right. Like I said, our period of public inspection has ended last Friday. So hopefully by the time we finalize the audit of 2020, then the auditors will come back to the committee with audit plan for 2021-22, and then we'll take it from there. Thank you.
I think just broadly, what we need to look at this one is, as I say, still unaudited. It's our own version of what is happening, the accounts, but it is almost there in that sense. The first thing is we've got to make sure that we, as laypersons, are satisfied that it, as far as we know, is accurate, compliant with all the rules that we know, etc. We know that the external auditors will go through with the FineCom and see whether other issues there are concerned. The public may have made some comments as well, raised certain issues that need to be investigated and so on. This is the process that we go. The other side of it is, I'm not sure whether many of the members would have had time to read it carefully, but is a mine of information for anyone who's interested to give you a good idea about the whole. There's the narrative in the beginning, which explains the overall picture of the authority and what we've been doing, what we're achieving with the money, with our money. There are various tables inside, so how much money we spend. I'm saying for some people is a huge surprise to say we spend well over £1 billion, just simply, every year on our running costs and the various bits and paying our debts and all that kind of thing, etc. There's how much is our property worth? You find all the information here, about 3 billion, etc. Then we've got the another, 1.6 billion pounds that through our pension fund, and then we've got all the subsidiaries. We've got the Alexandra Palace, the one thing and the other, the partnerships and so on. So that gives you some idea overall. It shows you from year to year how much we changed. It shows you the balances we've got, whether they are free balances that we can use any way we like, or the balances that are earmarked for very specific purposes. The table's seen it and it's worth looking at it, and you will see that it's quite a substantial amount, isn't it? About 130 million roughly that we end up that year. And it's going up and down from years, but it is still a very healthy amount. And even shows you things like, if you want to look at the salaries of our higher paid officers, for example, things like this, that you find it in. So if you haven't read them, I think it would be worth spending some time. You will learn so much, every one of us, that would be very good. But also, it may help us raise questions that we're not very certain, or whether we disagree with the overall picture from what we know. Having said that, by way of introduction, because I'm aware that some of the councillors, this is the first time they deal with this thing, and they will look a bit daunting in the beginning. Any comments, any questions? Anyone wants to raise at this stage?
Thank you. Just a quick question, because I haven't gone through all the report, so I just started with the narrative. So on page 30, it says key strategic risk for 22-23. And if I understand correctly, it says the statement of accounts includes the key corporate risk and governance issues. And I haven't seen them in the report. So I assume this is the risk register. So I wonder if somebody can clarify if I misunderstood that there should be the list of corporate risk in the report or not. Page 30 of the data pack is the page 14 of the statement of accounts.
Sorry, I had a bit of a difficulty on understanding what you were saying, but so is the key strategic risks side?
Yes, the third line down is said the statement of account includes the key corporate risks and governance issues that have been identified during 21-22.
Yeah.
And I haven't seen them in the report, so I don't know if I misunderstood the sentence and that they should not be in the report, or if they're simply missing. Thanks.
Can you identify whereabouts in the report they are? This is the problem with huge reports. You've got to get, to identify. You remember you've seen it somewhere, but you can't remember exactly where.
Sorry, Councillor, are you asking for the annual governance statement or the risk register?
Well, if I understand, the statement of accounts should include this corporate risk register and governance issue, no?
Statement, yes. Sorry, Councillor Rossetti, the statement of accounts would include the annual governance statement, the draft version, but it wouldn't include the risk register. I'm just going to see if I can find the draft AGS on here.
Is at the back, the last page.
Can I say, Alessandra, my reading of that particular thing is in the general kind of like narrative. It's not talking about a list of all the risks, but does say that throughout the text is identifying risks and how they're going to be mitigated. And indeed, there are various parts, say, if you read John Warlow's report, or the one, the narrative in the beginning, which is, this is the concluding thing. You find out on new homes, for example, we did that, and the officer would deal with that, and this is a problem we might have encountered there, or we encountered. I think that's how I read it, rather than having the full risk register, which will be somewhere else. But please correct me if I'm wrong.
Yes, you're right, Chair. The risk register is not part of the accounts, but the AGS is. Check page 151.
Okay, that's the governance statement, correct?
Yeah. Yes.
Okay, so it's one document called Key Corporate Risk and Governance Issue. Is this statement?
Sorry, I didn't get that.
Okay, this paragraph refers to a corporate risk and governance issue. Is it a document? And if it's a document, should be included in this data pack or not? You don't understand?
Sorry.
It's okay. I'll put it in writing. Don't worry. It's okay.
I
if
think
you don't understand it.
I'll have a go at trying to answer that question.
Yeah,
So
it's lost in translation, probably. It's not a problem. I'm put it down on members' inquiry. Thank you very much.
Any other comments or questions, please, anybody? Okay, so we Casey, I expect that we will have by the February meeting, you will have an update on that of what we know. Obviously, we won't be able to complete, but I hope that the audit work will have started. Yeah, am I right? So we, yeah, no, not on this one.
I think it's for David to answer.
Again, yeah. When is the audit work? I think it's probably somewhere in all these papers, but some reference to it. When will the 22 is here? When will the actual audit work will start? I thought you said you will start now. Oh.
Sorry, Chairman, can I respond? I did mention earlier that we will be completing our 2021 audit with a progress report in early February and the work completed with our completion report during March. I also said that we couldn't start planning the 21-22 audit or give you specific dates for that until that first audit has finished. But we would try and catch up in terms of the use of resources work by trying to do 2 sets of years at the same time. So you did ask the question, and I was able to say that I can't give you the specific dates because we need to complete the 2021 audit first.
Yeah, I think, thank you, yeah, okay, so we note the report now as this, yeah, and move. Thank you very much, and thank you for your time. Okay, thanks, Casey. Next item on the agenda is the Treasury Management update for mid-year report. So that is you, Tim. Yeah, thank you.
Yes, good evening, thank you, Chair, and good evening, members. Good evening, members. My name is Tim Hedolf, I'm the head of the Treasury Management Office. So the report that I am presenting to you this evening is the Treasury Management Mid-Year Report. The CIPFA Treasury Management Code, which is of the accountancy profession that the council signed up to, requires us to produce this report, to produce 2 reports. One is a mid-year report and one is an out-10 report, which is presented at the end of the year. These 2 reports need to go to full council for approval, but the functions of Treasury monitoring are the responsible of this committee, so we do present a regular update to you on a quarterly basis. So just to note that this is one of those reports that will go on to full council for discussion or for approval. The report itself provides an update on the Treasury management activities and the performance for the first half of the year. So that's from the 1st of April 2022 all through to the 30th of September 2020. So I think over that period of time, we've seen some key 3 themes that have really been quite challenging in terms of how the council goes about managing its Treasury management strategy. So the first thing really to highlight to members is we have seen that inflation levels have remained really high. And as a result, the banks, the central banks, which includes the Bank of England, have continued to increase their interest rates. So, for example, in March, so before we started this new financial year, the bank rate was around 75 basis points, so 0.075%, and currently it is at 3%. So that's quite a meaningful increase in a short period of time. I think in my relatively young career, I've never seen an increase of that magnitude, and it does present some interesting challenges for us in terms of how we manage our Treasury, sort of our debt portfolio going forward. There was also a bit of political uncertainty, which I think we're all aware of towards the end of September. And all these 3 things just led to an increase in how much it costs for borrowing if we're to take out any new borrowing on behalf of the council. So the main thing really to sort of highlight to members is the cost of borrowing will have an implication on any new borrowing that we are to take. As members may be aware, we have quite an extensive capital program which spans a number of years. In order to finance those capital programs, we do need to take out some borrowing. This is done in the context of the Treasury management strategy that's been approved at the beginning of the year. But of course, that strategy was set against a different set of assumptions based on where we are now. So just maybe to paint a picture a bit for members, at the beginning of the year, in April, the average cost of borrowing for a 30-year new loan that we take out from the Public Work Loans Board was around 2.63%. That is now currently around 4.6%. So that is again around a 2% increase in a space of 6 months, which is quite meaningful. So it means that if we were planning to borrow based on assumptions of 2.6%, that's now obviously a very different picture. However, when we do set our budget, and this is something we do as part of the MTFS program, so at the next meeting, we will be presenting a treasury strategy, which incorporates a lot of the assumptions on the capital program and also on what we think borrowing conditions are going to be to the medium and longer term. That will also have an impact, and that will be part of the budget setting process. But this current budget that we are reviewing is based on sort of the previous strategy that was set in March of 2022. So the final thing just to highlight to members as well is, in as much as the costs are going to affect the new borrowing that we'll need to take up, it does not affect the existing borrowing that's already in the portfolio. And the reason for that is we don't have any variable interest rate loans in the portfolio at present. So that means even though the interest rates have gone up, our cost of borrowing has remained the same, which is really a good thing in this type of environment. So there are no linkages directly to those rates going up. But of course, I think the point is mainly around what that means for us going forward. So just the final point to highlight to members, again, I think I've mentioned this in my opening remarks, is a lot of the treasury management activity that we have to undertake as officers is based on the strategy that members agree at the beginning of the year. And in that strategy, there's a set of treasury management indicators, which effectively sort of provide limits for us as officers in terms of what we can and cannot do in terms of borrowing, investments, etc. And on section 6 of this report, which I think is on page 185, there is a list of those treasury management indicators, and I'd just like to point out to members that we did comply with all those treasury management indicators that were set. So as far as managing the treasury management for this year is still within the scope of the treasury strategy that's been agreed. So I think, Chair, those were the key things I wanted to highlight to members, but I'm happy to take any questions from the floor.
I'm gonna suggest something. So we take the report chapter by chapter, just to make sure, because you know that in more by side. So the first bit starting is this external context, which is provided by our external advisors, Arlene Close, that gives you the picture, which most of us are fully aware by reading the newspapers and knowing things about interest rates, about inflation, and about the economy, the way it goes, and all that kind of thing, and the potential implications. Is everybody happy or want to ask for any questions or clarifications on this wider context there? It does seem to say that obviously, as we know, interest rates are going up. They might go a bit down again, a bit later. Inflation is going sky high. It's one of the highest, actually. It's higher than the average, basically, for Europe, and that kind of thing. But there are just various other implications on there. Talking about the prospects or the risks for the future. Is there anything you want to clarify, ask?
I've got a question. It might not be on this part of the report, but I just wanted clarity, Tim. So you mentioned that there might be scope for borrowing. Do you reckon that scope for borrowing will be this year or the subsequent years? Because interest rates this year is significant and next year might be lower. So how do you envisage that in terms of that borrowing will be?
So I think if I understand your question correctly, essentially you're saying whether there's scope of borrowing now or in the future. So in the context of managing the treasury management strategy, we do take borrowing from year to year. And that really depends on the prevailing interest rates at the time, but also on the progress that's been made in terms of delivering the capital program. So the set of assumptions at the beginning of the year is effectively a budget for myself and officers to stick to. And that's mainly based on what we call the CFR, which I think is in this report. On table 1 on page 181. And that's really the sort of the underlying need for the council to borrow. So we do not need to take those borrowing decisions immediately. we have our Treasury advisors who give us, who have wrote part of this report in terms of the economic context, who give us a view on where they feel the interest rates are going to be over the course of the year. So some of the things that they have been saying over earlier, I think there's a bit at the end of this report as well that mentions that interest rates are likely to continue to increase and stay high for a longer time. That just means that it means we need to revisit the assumptions that we're making in terms of how much it's going to cost us to borrow going forward. But for this year, there have been some meaningful opportunities that were below where we budgeted for. And our advisors advised us of those opportunities and said the outlook is the rates are going to go up. It might be worth you looking to take some borrowing this year. So on section 4 of the report, which gives a borrowing update, and I think it's on page 183, I want to say, yes, section 4.8. It actually tells that we did actually borrow this year 70 million, and that was averaging around, I think at the time, around 2.7%. But that was mainly based on the outlook that going forward, it was going to be more expensive for us to do so. So for now, there isn't an urgency for us to borrow, but if the rates were to move in a meaningful way, would be ready to take advantage of those opportunities.
Something just to clarify as well. No, first of all, interest rates are still, according to that, the base rate from the bank is likely to go further up again before it goes down in the future. So we've got to think about that in a sense. In general terms, as I understand it, that because we invest some money and we get some interest on that, and we borrow a lot more money, and that but these are different types of borrowings. In other words, now fixed rates, it doesn't matter whether they go up and down now because we had fixed it when we took them, or other ways, or that you have to deal with it. So this the way that nevertheless it changed now, the picture is the more you lend. If you're a lender, there is good news for you. If you are a borrower or somebody who need to borrow in the future, or you got already a debt, it's bad news for you. That basically is the broad thing, and that will lead us then to look at the local context, and just think about how the whole picture works on that one. So broadly, that's where we are. But there is one particular issue to look at here, and I thought, is it in page? Yeah, page 183. You make a reference to the 17 million pounds we borrowed, and I would like to highlight that, because it's one of the value of what this treasury management game is about, if you do it properly, in anticipating that we're going to borrow quite a bit because we're increasing our thing, and anticipating that interest rates will go up. We borrowed 70 million, probably a bit ahead of its time, a bit, in the sense that we could really wait until when we need to pay the bills. But we think, no, we're going to do it, it's a hammer now. And this paragraph 4.8 indicates how much, by doing that thing, how much probably we saved in our base budget. And if you think about the millions that it meant that we saved there by making that movement, and what it means in terms of cuts or investment on social services, etc. They can see, part of the value. So that is part of the value of keeping tabs on these reports and thinking creatively about it and knowing and having staff that they know what they're doing. But having said that, any other questions at that now, and then is the local context that follows up? Yes.
Thank you. Thanks a lot for that. One of the questions that I've got is around the implications for the capital programme and for other programmes in terms of the council strategy going forward. And clearly there are, at ground level, then a lot of people are really struggling, both individually, but also small organisations are struggling, and that has an ongoing impact, both in paying the council for council tax and business tax, but also in terms of how we support those individuals and groups. So that's one part of what I'm asking. And the second part that I'm asking is our capital programme in terms of being able to continue to fund council housing at council housing rates, rents, and also to continue to buy and build. How will that be impacted? Because all I can see is the deficit growing bigger and the cost of borrowing being greater, and therefore a risk to our financial and growth strategy.
Yes, so I think that's a good question in the sense of the cost of borrowing is one of many cost pressures that will be affecting a number of organizations and us as a council in terms of delivering on the capital program. However, Treasury Management is specifically looking at what is the budget for the debt and whether we can borrow within that debt limit. So essentially what we try and do in Treasury Management is look at the different rates in when we set in sort of the Treasury Management strategy, make some assumptions about what we think the long-term cost of borrowing is going to be on the context of the capital program. So that is part of the medium-term financial strategy setting process. So that work is currently underway. We are reviewing those, and when we do come to the next meeting, there will be a Treasury update, which would have all those assumptions in terms of this is how much it's actually going to cost to deliver on this program. My job obviously is to keep within the lines of the approved strategy, but there's obviously separate work within the council in terms of the capital schemes that are being reviewed in line of these revised assumptions. But that's not sort of certainly my responsibility. I'm just feeding into part of that process.
Thanks very much.
Firstly, thank you to you and your team for borrowing at a relatively low rates. I think you've saved us a few bucks. But my question relates to kind of the external environment. So, I mean, some economic forecasters are predicting that we're going to go into the longest recession ever recorded. How significant would that be to our treasury reserves? And also, in terms of the LOBO loans, if all the lenders do come back and want to increase interest rates to a point that is unbearable and we have to pay it back, how big of a risk is that, or how likely is that to happen?
Right, so I think on your first question, and thank you for the kind remarks, on your first question in terms of the impact of a recession on Treasury Management. So the understanding from our Treasury advisors is if we were to go into a deep recession, eventually the Bank of England would need to start bringing down those rates in order to sort of make life a bit more manageable for households, for everybody. So in the context of that, it does make sense for us not to borrow too much and to sort of weather the storm a little bit. And when rates are starting to come back down, it could be another opportunity for us to go in and refinance some of those programs and rebuild, etc. So in terms of the medium term, the expectation is rates are going to continue to increase. So certainly, we probably wouldn't be spending as much as possible. It's just going to be very difficult for us to do so. But in the medium term, we'd expect at some point, once we're on the back end of that recession, to start seeing things recovering and rates starting to come down somewhat. In terms of LOBOs, that's actually, a really good question. That's quite a focal point for us and the team. So we are constantly talking to our Treasury advisors around what the risks are on the LOBO loans. When the rates are quite high because of the trigger points of these rates, there is a high likelihood that indeed these loans will be called. But if the rates remain low, and in September we've sort of seen the rates come down, that actually means that there's a low probability of those rates being called, because that would mean they are giving us back the loans and having to find that money at a lower rate. So that's something that we're keeping quite a close eye on. The other point I would make on LOBOs is they are fixed on option dates. So there are specific dates within the LOBO loans or the terms that the lender can actually exercise that option. Once they miss that term, they'll have to wait until the next time. So for example, on a few of our LOBOs, which is quite a significant amount of them, might be around, maybe not for the record because I'm not sure the exact number, but I think about 40 million of that, that's every 5 years. So we would be expecting that every 5 years that'll happen. There is a likelihood that one of those 5 years is next year. But once we go past that period, then it's 5 years and there is no risk for us to have to refinance, etc. But usually when you're coming to a point of that there is a risk, our Treasury advisor will get in touch with us, and that's something we can discuss. We might be required to move a bit nimbly, and we'll discuss it with the chair and consult with the cabinet member for finance before we make a final decision. But that's something we keep on regular review.
On the LOBOs, can I just reiterate what we've been told in the past, And we do. Our policy is, as soon as we get the opportunity, we disengage, as long as we don't lose money on it. But it's not good. And if you notice here, there is the average is about 4.3% we pay now, and while for the rest of our debt we are lower. But in the past we made a profit out of it. It checks a balance. But it's a risky thing for the next 30 years. So as soon as possible. But it's not in our hands unless they are asking for a change, because they've got the option. That's why it's called lender's option. They have the option. And in the last few months, I've been advised by yourselves and the director that there is a possibility next year, with the interest rates going up and at least one of the biggest lenders that we've got on Lopez, that it might open. And we are preparing for that and as soon as the opportunity arises, we will jump on it, basically. Am I, just to clear the picture on that one, yeah? Okay. Any other comments, questions at this part? Yeah, Alexandra?
Thanks. It's about table 6 in the compliance. There are 2 items. One is the borrowing and the other one is the PF5 and leases. So if I read it correctly, at the end of September, there were 28.2 million, with the boundary being 23 and the authorized limit 25. And it says complied, yes. So 28 is greater, so it goes over the operational boundary and the limit. So I wanted to understand how this was compliant. Thanks.
Yeah, so maybe just to explain that table, because I don't think it's clear. The PFIs are part of the council's debt, but they are managed quite separately from the treasury management. They are usually sort of contracts that have a runoff. So when we're doing this work, this is based on how we expect those to go. So in this table, we're not sort of comparing them. It's just how we expect that runoff on the PFI that are currently in the portfolio to be. However, on the borrowing side, in terms of the operational boundary, that is essentially the maximum that we can borrow within any year, and that is the limit we can go to. When you present both the PFI and the borrowing, that then makes the total borrowing, which is what the table is actually asking for compliance against. So I don't know if I've explained that completely, but it's context of everything, whereas the PFI reduces the amount of borrowing slightly, which is not demonstrated as clearly in this table. So it's something we can revisit, but it's essentially in the total debt is what the compliance is testing up against rather than the PFI line.
Let me just clarify. So the point I think behind Alessandra's question is that on the 30/9/22, it was 28.2 million. Yeah, the combined for the PFI leases. Yeah, but when you go further down, it is higher than both the limits. Therefore, how is it compliant? In order to be compliant, it should be lower. That's what it looks like. That's the point. Am I right? Yeah.
I think maybe I was struggling to explain it before. I think the table itself is not explaining how PFI are linked to the total debt. So the compliance is against the total debt, which includes the borrowing, which is the long term, which is treasury management, and PFI, which is more related to contracts that are sort of being running off. So the number in bold is essentially the maximum that we can borrow. The PFIs, we can't change them because they have already been agreed, and over time they will be repaid. But what we can change is the long-term borrowing. So maybe it's a case of us revisiting how that table is presented to members. But essentially, in the treasury strategy, those numbers that you see, the 23.4 and the 28.2, are more or less going to be what we expect them to be at the end of the year. I don't know if that's helped.
I don't know, I see a comply at the end of that line, so I understand that overall everything is compliant. It's just that there is compliant for each items, and I still don't see how 28.2 is compliant with a limit of 23 or 25. And it says yes, so I'm trying to understand why that yes. I understand that the bold black at the end of the table, everything is overall compliant. It's just that the single item. So that was the question, and I still don't understand how it's compliant, but yeah, it's fine.
I'll have just one more attempt. So I think another thing that might be worth maybe highlighting on this particular table is The PFI and the leases, they get updated at the end of the financial year, not in year, whereas the borrowing is getting updated in year. So the 28.2 should be similar to the number that we had at the previous outturn. When we get to the new year outturn and the teams in the finance have looked at how that's panned out, I would expect that figure to be closer to the 23.4, which would mean we've complied. So maybe another thing to highlight is the PFI and leases is not something we're actively management, because that doesn't fall under Treasury responsibility.
I think 6.3, the next sentence, is the get out clause. Says doesn't matter in the mid-year because it goes up and down, that kind of thing. So I suspect that's what your team is hinting at. Okay, the broad thing is, you notice we've made the point, you're assuring us that it is compliant with the policy, yeah, and you wouldn't have put it in writing if it wasn't. Yeah, that kind of thing. Now, any other questions or comments? I know it's a bit of a, but please ask any questions, even if they sound naive. We are all, amateurs on this issue, but we've got to ask any questions possible to make sure that at least we seem to agonize as much as possible, not accepting just things straight away. The point now I want to check. So look. We have this thing that you call it capital finance requirement, CFR, where it means that we know what the plans are that the council has decided, the cabinet, the council, etc. And on that one, we say, in order to do that, you've got to borrow so much at these rates, that kind of thing. That is the limit on what we have already agreed. But then we look at what we could possibly borrow, if we really needed to more, which is still, it's possible legally and without breaching our kind of like fiduciary duties, if I put it that way. Yeah? And this is the other limit that you see there, the kind of like authorized limit. And in between the two is something that says, well, this is what your requirement is at this moment in time. But, we would be pretty safe if it was to decide to go a bit higher on that, and that's called the operational boundary. Yeah, but if you want to go above that, it might be some more leeway up to the authorized limit, but you need to look at the implications of it. Now, this is important to us right now because we're going through the budget making process as well, and we have to make sure that we check these things so that the cabinet knows what they're doing on these particular issues. We help them. And what we found out is that until now, looking at this report, interest rates, we're borrowing a lot more money than we were in the past because that is our plan. Yeah. Now, what this report tells us is we can continue with exactly the level of borrowing that we have agreed until now without any dangers, partly because we borrowed in advance some of the money, partly a lot of it is fixed rates, this and that and the other, and or for one reason or the other, well, we can do it within the limits that we've got. I just want to confirm that that's the case. Now, we got so that covers the interest rates to a certain extent because of the thing. But what you buy with this money is the inflation coming in. And this is another issue. In other words, that doesn't say you can achieve with this borrowing what you wanted to achieve in any case. All right. It's only about the amount of money being the same. And I think one of the challenges we have in the budget, or the cabinet has got at this moment in time, is whether by borrowing as much as we had planned, we will achieve, let's say, as many houses as we wanted or other things, or we have to somehow trim, that side of it. And I think that is one thing to note when we're going through the budget process now, all of us as councillors. It might be that the only way the inflation would be that by finding ways of reducing, either reducing the cost in a very particular way or reducing our plans, and dropping some of the things. The alternative to that would be that we would say, fine, but we have to go higher than these figures that are here in terms of borrowing, and that would have knock-on implications on our base budget or our HRA, in general, the rents and all that kind of thing, whatever we have to charge there, yeah? Am I broadly right? I think if anybody wants to clarify any of those points, now is the opportunity to just talk with them, to discuss a bit more. Yeah?
I just had a quick question. I'm not sure which one of you it's for, but I think it was in a previous report we said we were also giving out loans. I was just wondering, is that on a fixed rate as well, or if I read that correctly?
Yes, so as part of I think there's some information about this on this report as well, which is on section 5, which is the treasury investment activity. So as part of managing our treasury balances, which is basically our cash flow. So essentially what happens is the cash flows in the organization do fluctuate from from day to day. So what we have to do is when we have an excess in money, we need to find a safe place to put that money. And again, that's within the context of the treasury management strategy. So particularly we would invest that money or deposit that money with either money market funds, the debt management authority office, or other local authorities. So with other local authorities, that's where it can be lending. So effectively we agree a deal with another local authority, maybe a neighboring one or whatever, and we agree a rate and a fixed term, which is usually under 365 days. That's what the treasury strategy allows for. That can kind of provide us with a bit of return whilst we are waiting to use that money. But usually we try and keep the money as close as possible as it is, because we don't have much of we don't have like a big cash book, for example. So most of our balances, as you see in the table, I think it's table 4, they're mainly within the debt management office or within the money market funds. That's because those areas are really quick for us to draw down the income. We can draw it down on a daily basis. So the team will do sort of the daily management of the cash flow. They'll be using these resources in order to make sure that we're getting as much of a return as we can. So in the context of a rising interest rate environment, that's where really there is a bit of a benefit for the council. So where previously we're not really earning any money on our debt management office deposits. This time last year, I think was still 0%. So it was just a safe harbor. We knew we weren't going to lose the money. Now we see the average rate is over 2%. So we are getting a bit more return. So it does give us some realignment when we're doing the next strategy in terms of what we can actually do. If we're going to be increasing cash balances, we might want to make sure we're getting the best value that we can from them.
Yeah, I think the bottom line is, from these ones, we're doing a little bit of a profit, more than a bit more than we were expecting. But it's not huge amounts, but nevertheless, every little bit helps. Yeah. Sorry, Eldridge.
I think the argument would be there's no safer place than the UK government. So the debt management office is a UK government agency, and that's who we would sort of deposit with.
I'm not sure if I understood you, Tim, but when you're speaking about the council's debt management, who are the debtors?
Sorry, Councillor, so could you?
My apologies. So you spoke about the council's debt management, and it wasn't clear to me who the debtors were, and then based on the answer to that question, I might have a follow-up.
All right, so just to explain, so in table 4, which is kind of overlaps into page 184, there is a government agency called the Debt Management Office. It allows local authority to deposit funds overnight or as much as 6 months, so we can actually leave the money in their custody for a maximum period of 6 months. And for those periods, we offer different types of interest rates. So what we would look at is essentially what our cash flow looks like over the next 6 months. And if there's an opportunity for us to deposit for longer, we'll do that because we get a higher rate. But usually because our cash balances aren't as big, we tend to do overnight or shorter term lending. If we're to do longer term, we'll probably do with another local authority rather than the debt management office. But with those rates increasing, there will be opportunities for us to have diversity of debtors. So in terms of this, the debtor is actually the UK government because they manage that entity.
Yeah.
Okay, what do you want to say? Any?
Thank you. And thanks, Isidorus, for the, I should call you councillor, but anyway, thank you for the nudge about the borrowing and debt and management strategy, because I think that that's the area that I'm most interested in, is whether we are able to ensure that the significant capital programme as outlined in 4.9, that if we are unable to borrow more, then how will that impact on the debt and management strategy? So where is the room for manoeuvre in order to make sure that we can meet our strategic targets in terms of the capital programme?
Yes, so I think in terms of the delivery or the assumptions that go into the capital programme, we will be sharing the same assumptions that we have now in terms of what we think the cost of borrowing will be, but that takes part as part of that medium-term strategy setting. So certainly for this report, this is just sort of providing what's already been decided, how we are managing it against the decisions that have already been made. But going forward, we will be setting the medium-term financial strategy, which is a wider program outside of Treasury management. We do input into it, but it's much wider than that. And that would then have an implication. If the rates are higher, some capital programs will need to be reviewed, whether they're still affordable. And that takes part within that context. I can obviously comment on different schemes. I'm not familiar with that work. For me, it's just talking around, we think this is what the assumptions are going to be. And that work is done over a period of 5 years. So it's not just looking at what's happening next year. We're looking around the 5 years. That's the medium-term financial strategy, and feeds as part of the overall council's budget setting process.
I understand that, but the question to us as councillors will be that we can't borrow any more money, that we already owe, that there's not enough money in the pot, and therefore we cannot meet the challenges of our capital programme because of the business rates and the debt and management strategy, etc. I don't know enough about this. I'm really looking forward to the training. But I still think that you will have some influence in terms of the Treasury management and how that's going, because one, you'll inform us about the difficulties that we're having and the reduction in borrowing, if that's going to be the case, according to strategy. And we will still be asking questions about, but can we borrow more? What are the limits? How are they defined? Who defines them? And if it's not your role, tell me please, but it seems like it is, that you will give some advice about that.
Go on.
Yeah, so it's not my role, but as a finance team and working with services, we do engage with them on this. So my role is mainly on inputting what it would cost to borrow for financing a particular scheme. That will obviously have an impact in terms of the interest rate that scheme would have to pay, whether that's affordable, and that's assessed by the teams that are managing or looking to deliver these programs. It might be a case that the result of that work is certain schemes are not affordable anymore, which might mean they need to be paused or not carried forward. But that again is taken outside of this particular decision. That's what's going to be coming on over the winter, is essentially what that discussion is going to be about. And my input would be mainly on assessing whether the affordability or what the rates are likely to be and how it's going to borrow. But I don't make the decision on whether a scheme goes forward or not. I completely get
that. Yeah, I completely understand that. But I still have a further question, which is, you will be giving advice, and I want to know where we are in terms of our borrowing limits and whether we have borrowed as much as we can, and what the shelf life is, if you like, between where we are now and where we could go in terms of borrowing. And I understand that's unpredictable because the market's changing, etc. But I think the balance for me is the threat between the threat to our capital programme and also the issues that you are raising in terms of the limits to our borrowing. Now, maybe there's nothing you can say about that at the moment, but it is something that I think is important.
The reference to the 6.2 table might be, Tim, am I right? And I'll bring Toyin in a minute. I didn't see you. Sorry, Toyin, until now. Did you want to, on this particular point, to respond? Yeah? Yeah? Yeah. If you introduce yourself, although I think probably some members seen you before, I think it would be, welcome aboard. But yeah, just introduce yourself.
Thank you, Chair. So I'm Toyin Bamidele. I'm the Interim Assistant Director of Finance and Deputy Section 151. So just to add on to what Tim has said, he's actually explained it really well. We do keep an eye on the capital program on a quarterly basis, even throughout the year, just to see what we are how we are performing and the delivery of the program. And as part of the budget setting for the 5-year, the MTFS period, we do make a provision for what we plan to borrow for that 5 years. There is no limit to borrowing. However, it depends on, there's no legal limit to borrowing for any local authority. However, it depends on how much appetite we've got within our revenue, because for every borrowing on capital, we will have to make provision, which is called the MRP, within our revenue budget. So that bit, it's what then determines if we can afford it or not. So no one goes out and no authority can actually afford to take the maximum limit, even though there's no limit. I hope that helps a little bit with your question on the limit.
Thank you very much. Yeah. Yeah, thank you.
The conclusion is we could borrow more, but it will cost more and they will have a knock-on effect on our revenue budget, if you like, which means we might have to cut somewhere else. As long as we can afford to make the repayments, we can borrow more, and that's where this authorized limit and operational boundary come in, basically ideas where we set it up. Yeah, okay. The thing that I see throughout on this report, because we are supposed to check on these things now, is whether we have set up certain parameters, such as safeguards, certain indicators from the very beginning. And every quarter we have to check and be reassured that everything until now that our officers have been doing, everything that has been happening is within these parameters and is compliant with everything we decided. I went through the report, like everybody else, I suppose, and what I've seen here, and I just want this absolute confirmation, everything, every little indicator is being met, everything is within the limits we have agreed. There is no exception to that one. Am I absolutely right, that one? Yeah.
Yes, that's correct, Chair. So.
You put it in the minutes. Okay. Any other last minute questions? Any other things? Yeah. Okay. Thank you very much. I hope that it's yeah. Go on then. Sue.
Sorry, Councillor, can you turn your mic on? Thank you.
So at the bottom on security, 6.5, you've got an actual credit rating of AA for September 22, but for 22-23 you've got a target of A-. Have I read that right? And so therefore, why have you got why is your credit rating going to go down? Why is our credit rating going to go down?
Thank you for your question. So just to confirm, this table is actually the credit rating of the counterparties that we invest with. So it's not our rating, it's the rating of other institutions. So that includes, again, like I said, the debt management office, other local authorities, or the money market funds. So in terms of this report, AAA, AAA is sort of the best security so you can get, and that's mainly based on the institutions. It's very rare to find an institution now that's got a AAA rating, and anything below A- is kind of considered to be sub-investment grade, which means it's got a risk attached to it that might result in a greater default. So we have set a target of a limit that we won't go for anything that's sub-investment grade. If you look at the average in the portfolio, our biggest balances are with the Debt Management Office, which is based on the UK's credit rating, which is currently around, I think it is AA. But we also have money market funds, which might even have a higher rating than the Debt Management Office. So this is just essentially saying that our investment strategy is to make sure that our money is secure or is held with secure counterparties. And I probably would worry if I was getting close to that 7%, because it might mean that we're taking a bit more risk, and the committee might want to be comfortable with us taking that level of risk going forward. So the lower the number is usually really good.
So Tim, let me just check that bit, because if I understood Sue's question, you have said here for next year what is our strategy at this moment in time to be the minimum, and it will be A-. But at the moment, we're exceeding that much better by having AA. That is really the answer. It doesn't mean we are trying to be A- next year. It says that it couldn't go below A-. That is probably the most probably. Thank you. Any questions or any other? Yes.
Yeah, just a quick one. I know we've asked you loads of questions, but just on 6.6, it doesn't really make sense to me. So our target is to be on 10, but we're on 61. Wouldn't it make more sense to have more cash in hand and be more liquid than go for a target that's lower? Or have I read that table wrong?
Yes, so no, you read the table right, but the context for when this target was set was when we were in a different economic environment, so we weren't getting any return on our deposits. So the strategy last year, certainly if you're on this committee, was to keep balances as low as possible, and 10 million was kind of the breach where we felt like if we didn't have 10 million, then we might not be able to meet our payments. Since then, things have changed quite significantly. We are finding that we can get better returns on our investments, hence why we are holding considerably more cash balances than we've done previously. But also to mention that this available cash within 3 months also just talks around liquidity generally. So if we were in a case where maybe we were below the 10, we can always go to another local authority and ask them to lend us money on a short-term basis to fill that breach. So this is just, mainly talking around when we're setting, we're trying to keep the balances lower. Going forward, we might not want to keep them as low. And certainly if we're going to have to be taking some long-term borrowing, we might want to have cash that's there to make sure that we're meeting those higher interest payments.
Probably we discussed it enough, and hopefully we're all happy to note the report, and go ahead. I think there are, if we take the previous report, where it had a summary from the previous year about our balances and the contingencies and all that kind of thing, which is huge, substantial, big number. If you take from this report the issues about the capital finance requirement and the leeway of how much further we can go and what the implications are, I think these are helpful building blocks towards making next year's budget and interpreting it, what we can do. Yeah. Thank you very much. So we note that report, and let's move to the next item now, which is Internal Audit Progress Report 22-23 Q2.
Thank you, Chair. So this is the usual quarterly report from me. The key points to note is that in the last quarter, 7 reports were finalised. Of those, 4 were assigned adequate assurance, 3 were assigned limited assurance. Details of this are attached at Appendix A in the Mazars summary. The 3 assigned limited assurance relate to the CCTV control room, management of trees, and there's a school, South Haringey School. I've attached a quick summary of the key findings in relation to all limited assurances on pages 192 and 193. The other point to note is that at the last meeting, the committee asked that I bring details of recommendations raised in respect of audits carried out as part of the Homes for Haringey housing function last year, and the progress in delivering those recommendations. Details of this are provided at Appendix B, But in summary, there were in total 60 recommendations raised. Of those, 43 have been followed up. And of the 43, 18 have now been fully implemented, 19 are partially implemented, and 6 recommendations have not been implemented. I'll just pause and take any questions there, Chair.
Thank you.
I have 2 questions. My first is on the audit on the management of trees. In the pack we received ahead of this meeting, I understand that the conclusion was that the council is not sufficiently protected against the risk of insurance claims due to harm arising from trees potentially harming the public or private property. What should the council be doing to make sure it is sufficiently protected against this risk?
Thank you, Chair. So a number of things. The key, or pardon the pun, but the root cause of the issue was that the service didn't have sufficient funds to carry out its operations in entirety. There are 3 or 4 key steps that the service has to take to manage its trees. The first is around having a clear plan, a risk-assessed plan of what trees need to be inspected at what frequency. The second part then is for the inspection regime to take place on a regular basis and for that to be reported formally. And then the third phase is if there are remedial steps that need to be taken, that those remedial steps are taken. And essentially in all 3 areas, there were some gaps, predominantly in the second and the third, and because of lack of funding. So I think the remedial steps that need to be taken are for funding to be increased and for a clear strategy to be set out.
Follow up, and are you happy with this response?
I'm happy with the response. My question was on a different point in the report. So I'm happy with the first response. My second question is on a different part of the report. So I noticed here that you mentioned that several recommendations have been made to strengthen the control environment in South Haringey School. Would you be able in this context to give us, to shed some light on what those recommendations are, or is this confidential information?
So what I tend to do is for schools, because we audit so many schools each year, that I will bring an annual report which captures the findings of all the schools in one report and present that to the committee. But I'm more than happy to share with you the audit report which sets out the findings if that's helpful. But there were quite a number of recommendations raised which again crossed over a number of different activities of the school. So I'm happy to share the report.
Thank you.
Just a minute, just a quick one in relation to CCTV cameras. Looking at the table, it's limited assurances. So one of the reasons is that the individual cameras data protection impact assessment hasn't been done on the cameras. Have you made recommendations when those assessments will be made in order to relook at the assessment? Thank you.
Thank you, Councillor Dugan. Yes. So what's really important in the management of our CCT operations is that there is a code of practice, and that code of practice must be adhered to. A key part of that is whether by putting our cameras in the locations that we have, we've carried out that assessment and be satisfied that it's in line with the code of practice. The services said that they will carry out and complete that assessment. I can't remember offhand what the date is for the implementation of that recommendation, but I can certainly look that up and make sure I share that. But the key thing is that it's got to carry out those assessments quickly and be satisfied that by locating the cameras in the locations it has, that it's not disadvantaging or seen to be aggressively over monitoring certain aspects of Haringey.
Eldridge.
Regarding the trees, especially in house areas, in building areas, and I'm talking from experience now in Stroud Green, where trees are damaging homes. What's the council's position on that? Felling the trees or trying to mitigate and leaving the trees there by maybe trimming, if they can, the roots? I don't know. So what exactly is the council's position on that?
Yeah, that this doesn't really fall into my territory per se, because I'm on the other end. I'm looking at what the regime ought to be, but I do know that it's the decision making is on a case-by-case basis. There are so many factors that go into determining what the course of action should be. What the audit is doing, though, is that it's providing an avenue to help manage the inspection and the maintenance of trees to a level which hopefully means that they don't cause damage to property or to people. That's the ideal scenario that we'd wish to get to, a point where actually damage is either very small or none at all.
So will your analogy, will that be taken forward, or is it being taken forward to new homing house developments at the moment?
I couldn't tell you that. I couldn't tell you.
Can I just interfere here? Because both Anna's question originally and yours, Eldridge, there is the concern that a lot of the councillors have got. At the moment, there is a move or fear that we're going to start felling more and more of the very mature trees. And a particular case is in Eldridge's ward, is an ancient plane tree, massive one that's been, that thing, because there is a potential claim, a insurance claim next to it, and there's a whole occupation, things like this. I don't know, it's been a lot, it's a big important thing. And the difficulty is that it's not an audit question, your audit plan, because your audit doesn't look about the policy of the council. It looks about whether it's compliant, with the risk, management and the rules, the regulations, and so on. That's all. If the council wanted to fell all the trees, that's fine from the audit perspective. That was a decision. It really was to save them and spend more money, or in a different way, is a different story. And I think it might be helpful to advise councillors how do we go about it, because I'm just following the issue with the plane tree, the London plane, the big one. You go outside Tottenham Town Hall in that area, you will see some equally big and bigger actually plane trees there, 5 meters from the wall. How come they're fine, but in Oakfield Road, it's not. That kind of thing. What is the difference? Are we following the right policy, or are we just having a knee-jerk reaction? That kind of thing. My guess is, and I want you to correct me if I'm wrong, that probably that is a subject for the scrutiny to look at rather than audit, because it's a matter of policy, balancing the costs with the other things, that kind of thing, and going into the actual detail. But just correct me. I think you find out a lot of my colleagues, a lot of the councillors are concerned about that particular issue. Yeah, Alessandra.
Yeah, and I just want to add, in the in the email that you sent during last week, there was the detail of these recommendations that were raised, and there were some time scales and responsibilities for each of the recommendations. So, some of the recommendation was sort of, the lack of a tree strategy, and it's actually under consultation. But other recommendations are about introducing KPI and having an inspection plan that is actually respected. So is the audit team going to, go back and revisit in a year or 2 times to see that this recommendation have been followed up? And in case, can you let us know when is this planned for? Thanks.
That is also, so just picking up on your point, Councillor Coverwell, auditors will not influence policy. They will check to ensure that whatever the policy of the council is, it's been followed through properly. So they will check compliance with policy, but they won't be part of the policy framework. Hence, I couldn't answer your specific question. And Councillor Rossetti, that's absolutely right. So for the recommendations that have been raised, there will be a follow-up, and we would want to see the status of those agreed recommendations and the implementation of those per the timescale that they've set out. Yes.
Thanks a lot for sending the report on Homes for Haringey and the transition and the recommendations. That's really helpful. Thank you. I did have a couple of questions I wanted to ask about, which is the outstanding reports, and noted that they're antisocial behaviour, repairs stock. I'm not, is that a void stock? I'm not quite sure what that means, but and the also responsive repairs I noted are outstanding and past their due date. And as you probably know, as councillors, probably 70% of our work is around repairs and the delay in function of the repairs team in Homes for Haringey, Haringey Housing. And so I am particularly concerned about that and why there hasn't been, why that audit hasn't taken place or the recommendations haven't been implemented. So, yeah, if you could let me know, that'd be great. Thank you.
Thank you, Councillor. So just to put the context around this, what the auditors will do is they will go and do an audit, which has been done. The report that you refer to, the follow-ups, these are audits that were all completed last year. And what the auditors have done, they've gone back in and tested to see if the recommendations have been implemented. And what they're saying is that for the 2 areas you mentioned, so for the responsive repairs and for the stock, the management of stock, not all the agreed recommendations have been implemented. In other words, many of the risks that were originally identified still remain. They haven't been addressed. I couldn't tell you why they haven't been implemented, because they should have been. The service is better placed to say something about that.
That is what I understood when I read it. So thank you for that. So really, if we've got questions about that, we need to probably go back to housing. Thank you very much.
Thank you, Chair. Just a very quick introduction in that case. So the next report is the anti-fraud and corruption update, Q2 progress report. The report itself identifies a number of activities that the anti-fraud team has been involved in. Of particular note is the work that continues to be done around the recovery of properties that may be misused in some way. For Q2, 8 properties were recovered by the team, and the year-to-date position is 13 so far. I'd like that number to increase substantially in the next 2 months, 3 months, because I think there is potential for more recoveries. The other measure is around the right to buy, right to buys that didn't go ahead following intervention by the team. What the team is trying to do is make sure that people who are intending to buy are eligible to buy, and they carry out their due diligence in that regard. and 40 properties didn't proceed following some further work. Just one piece of good news I'd like to share with the committee. Last week, sorry, let me just start again. I've previously indicated that there are 2 cases which are with the criminal justice system for prosecution of people misusing their tenanted properties. Last week, one particular case went to court, and we were successful in the criminal courts in regaining our property because the person actually was misusing their property.
Just one note of caution sometimes when the performance indicator is so much. Sometimes not achieving the performance from this type of thing is good news rather than bad news. It means that there hasn't been as much. As long as we are convinced that we're doing anything we can, then the fact that there hasn't been as many fraud cases as we probably anticipated at the beginning or something like this, that is good. But not always, but sometimes it's good to be careful about how we interpret the things. And I think I would like to draw some attention to 12.2 in the report. Now, for years, we're using as an indicator that if we were to prevent the loss of one council house, housing unit, the then audit commission had advised you use as an indicator a net saving to the authority of 18,000 a year for each one of those. And now this one talks about an update, and I would like to explain that, which makes it almost more than double, that amount, etc. And for a lot of us, we're presented then the average cost, the reason for why you save so much money by having an extra unit, not losing one unit or buying an extra unit, is because you end up in the end legally obliged to hire, to rent somewhere a bed and breakfast or something for a temporary accommodation, which cost us a lot more than, if we had a tenant in this flat. Instead of putting that family there, we put them there, that kind of thing. And a lot of the statistics were given by often the housing department to take the average cost of temporary accommodation, usually around £5,000 rather than 42,000. But I think it would be good if you try to explain to us so that we know exactly how we reached we've reached that figure and how does it square the circle with the other figure.
Yes, thank you, Chair. I think it's best to say that these are estimates, and these estimates tend to be, for example, the 18,000 with the 42, sort of England-wide. So it's very hard for that general number to be recognised in some spaces. So you can imagine if you were living north of England, you might think 42,000 is extortionate. What happens in reality is that when we present our case to court, we become far more precise about the actual calculation of what we think the cost to the authority has been from being deprived of a particular unit. And we tend to use specific references to the cost to us of temporary accommodation at a particular postcode, as an example. We also then take account of the rent that people have been paying, if they have been paying the rent, for a property that they're living in. And the difference between the two tends to be what we would pursue from a legal case point of view. So I think these are numbers that we use in a way that gives us a sort of a way of judging how much a fraud is worth in general terms. But actually, when we prosecute, we become much more precise and use actual data that we have available.
Just going back on identity fraud, and you're talking about housing, and does that come into play a lot? People put on different identities, or if someone's dead, they claim they're not out.
it's fair to say we get the complete basket of everything. So yes, identity fraud is part of that sometimes, but a lot of the times what we find is where you've got organized fraud, organized crime, the operation or the way in which those frauds are perpetrated is very different to people who are opportunistic, and they take a very different line. But yes, I don't think any authority or anybody is particularly safe from any one dimension of the types of frauds that can be perpetrated. Yeah.
Other comments? Yeah. Okay, so we note the report, yeah, and the contents and the work that the progress should be made until now. Yeah. Yeah. Thank you. The next item is the penultimate one. Is the is it the matrix? Yeah. It's again Umines.
Just a very, very quick introduction to this. Yep, page 211. What I wanted to share with this committee was the outcome of the committee completing the skills matrix. Thank you all for participating. It's been really helpful just to get a sense from you of what you believe would be really helpful for you to receive training on. What I've done is analyze the outcome of your feedback, and at paragraph 11.3 and 11.5, you've got an assessment of the average score for each of the different areas. And what we'd like to do is program in training, which I know you're all keen on, over the next few cycles to capture all of the different strands, prioritizing those which have received the lowest score. That's what I was going to say about this paper, yeah.
Any comments, any suggestions?
Just a really quick one. Thanks ever such a lot for doing that. I think that'll be really helpful to us. The only question I've got is about the external audit, which came within your parameters, 2.6, and just wondered when the best time would be to have that training to ensure that we are able to review the audit.
Thank you. So I think if it's okay, let me go and speak to the external auditors and arrange that as well.
Thank you.
I think over the next 2 cycles, we've got Tim. Yes, so we've got, I think, Casey for the next one in February for financial reporting, and then Tim for the 28th of March for Treasury Management. If we then factor in external audit for the, I think it will be the July committee.
Sorry, put your hand up. Did you want to? Are you waiting to speak? Is it David? David? No. Okay, thanks. Okay, so no. On this report, we discussed as well that there is another aspect that's coming through. We're looking at the terms of reference and the structure of the committee, all that kind of thing. And we, Mines has provided me with all kinds of advisory notes from national bodies, etc., attended various courses as well. One thing, we generally seem to be very good at our structure, except a couple of things. But the one thing is that we don't have any independent members of that committee. And so it's always a facility, and it's good practice that we should have some, especially then you look at whether there are some gaps in our experience and knowledge that can be filled, as well as the sheer fact of having somebody who's not a councillor as well on it, who will be, it's in a copy and everything like this. So this analysis here may lead to something like this. That is the one thing, and linked with that, and then comes to the training, is seeing a training that was provided by, was it?
It was from SIPFA.
SIPFA, which was just a general introduction on audit committees specifically, and which I thought was very, very good, excellent. And I think I asked that between Jack and yourself, whether we can arrange to have that for our members here, not only the members of the committee, but others as well, to know exactly what the role is, the legal process, what other authorities are doing. So it's these two issues. Do you want to say a few things on these things before I make a suggestion or two?
Thank you, Joe. So the context to this is that we've got a number of members who are new to this committee. The role of the committee and the importance of the committee is definitely noteworthy in terms of your role in governance, risk and internal control. CIPFA provide some material and a training course around how you can carry out your role properly. But it's actually bigger than that, because actually the council as a whole needs to understand what that is. And there is a clear appreciation of what the expectations are. So I've consulted with somebody who can provide that training in CIPFA, and they are suggesting some dates that we would open up to all members of the council for them to be able to attend. It would be biased towards the role of the committee, but it'll be also helpful for people who are not on the committee to understand what that role actually is, because I think it will help strengthen an appreciation of the governance arrangements for the local authority, and more broadly, the sorts of things which this committee ought to be looking at to support the overarching governance framework of the council.
Regards the issue of the membership of the committee and any independent ones, how would you advise us to go about exploring it and making a decision? Is it our own decision alone, or is it something that has to go somewhere else? You know, that kind of thing. And how do we go about it?
Yeah, exactly. I think it's part of the constitution. So at the moment, the corporate committee is constituted as it is. There is guidance out from CIPFA, which recommends that we amend that and augment that with independent members. But also there are other suggestions which are essentially designed to make sure that the committee, the audit committee or the corporate committee, is seen to be completely independent of any other operations of the council and can advise the council on risk management, governance, internal control in a constructive way. So there are a number of steps that CIPFA have recommended. The thing that hasn't happened is CIPFA were going to publish quite a detailed account of what that committee role should look like. At the moment, we've got an overarching, if you like, a brief summary, but we haven't got that detailed document that hasn't been published. I think once that's published, if I was to circulate that to all the members, it would be really helpful for you just to get a sense of what the expectations are from a professional body, essentially, and how we can then, in the council, set up the right regime for that to be implemented. Which I think is taken as read that we will be looking for independent members. That I think is something that is highly recommended. They may even go further and say instead of having one, we might have to have two, or suggest we have two. And I think it's because of the technical nature of all the things that come in front of you. You've had Casey talk about accounts on the one scale, and there's Tim with his treasury management, and there's me with my internal audit and anti-fraud and risk management piece. These are quite sort of different disciplines and require a lot of skills and experience that I think a committee could benefit from, having independent members who are experts doing that sort of stuff on the ground on a regular basis.
If
If I can just add, I was part of the boards of Home for Haringey, and we did have independent members. I can confirm they were very useful, and the inputs were always very good.
I wonder, Ines, like you did this circular about the skills, whether you would do another little gallop as well with the members of the committee, with some circulate the SIPFA advice generally that you say good practice and ask for comments and suggestions, you know, for people to respond to, and then we discuss it when we have the training about the role of the committee with the SIPFA person. Yeah. So to follow it that way. Excellent, thank you. Thank you very much. So with this, we know the report. We've got no items of new business, isn't it, anymore? No? Okay, so now we reach the stage where we go to the confidential part of the agenda, excluding the press and public. So is everybody, do we go to switch off some, or is everybody, everything okay, yeah? All right, let me just start by apologizing for you asked me you wanted to go early. The reason we couldn't put you earlier on is because by the nature of the subject, we had to be on the confidential part, which comes at the end of the agenda, and we couldn't really put it at the beginning. Thank you very much. Thank you for your patience. We had some issues last time.